Good morning and welcome back everyone to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at Options Play. And today we're going to take a look at where the equity markets currently sit and what is moving in the broader markets. Now, before we get started, what we are going to discuss here this morning is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we will discuss here today. So we'll start off by taking a look at the major equity indices. Things are improving a little bit, but there are still some concerns that we have with the broader markets. We'll then take a look at the fixed income markets, which so far have been holding fairly steady at the moment. Not a lot has changed there. Commodities also not a huge move. We've seen some improvements from some commodities, but they are trading against some major resistance level. We'll show you what those are. We'll take a look at which sectors are strengthening, which sectors are weakening in the sector rotation model, and then show you some of the stocks that are breaking out and some of the stocks that are breaking down and moving in this particular market. So let's start off with the S&P 500, which has had a very strong uptrend here, remains in this very strong uptrend, just a very slow grind higher. It continues on this grind higher yesterday and made a new all-time high. Yet these new all-time highs that we continue to make here in the broader markets, higher highs in price, no longer confirmed by higher highs in momentum. These slow grinds that we continue to see here in the broader market. Same thing in the NASDAQ 100 index, very clean uptrend here overall. But recently, as we continue to make higher highs, no longer confirming those higher highs with momentum. But we did recently make a new high in momentum here recently. So that is confirming at least the NASDAQ 100 strength here over the S&P 500. When we look at small caps, IWM remains in this range bound range between 210 and 235 or so to the upside. And we are starting to test the upside of this particular range. But as you can see, it's still nowhere near towards its all-time highs that it put in back, I believe, here in mid-March or so. So the small caps have made no progress here, while the major market cap, mega cap names have continued to march higher here. Now, when we look at the S&P 500 equal weight index yesterday, failing to make a new high when the S&P 500 makes a new high. So market breadth here overall is improving, but certainly not enough to keep pace with the S&P and the NASDAQ continuing to make higher highs. And we'll show you some other charts here that confirm that market breadth is improving, but it's not quite enough for markets to be at all-time highs. And then when we look at emerging markets, EEM, this is the 150 level that's we've been holding for quite some time as support. Now we're back to retest this level as resistance. Momentum so far looks fairly positive here. Looks like it may get back up towards that 200-day moving average, which it was rejected at this level here when it broke below the 200-day moving average. So the question is whether we continue to see this trade lower here from this resistance level, or it starts to get back above its 200-day moving average and perhaps resume going back into more of a range-bound motion here for emerging markets. This is a key market to pay attention to for the outlook of U.S. equities, to see how emerging markets and other international equities are doing. When we look at the percentage of stocks that are trading above its 50-day moving average, this number has improved quite a bit because we've been in the 30 to 40% range for quite some time, 30 to 40% range. So the fact that we've managed to break out here and we're at 51% is an improvement. But for markets to be at all-time highs, yet only 51% of all stocks are trading above its 50-day moving average, does not particularly bode well for an equity market trading at all-time highs. It doesn't instill a lot of confidence in the overall markets, because typically when markets are at all-time highs, you want to see broad participation in those all-time highs. Right now, have only about half of the stocks in the market that are participating in this. Now, just in itself does not mean anything per se, but what we do see is an improvement. That is a good thing. It's just not quite where we would like it to be in order to have confidence in this market rally. So as we look at the bond market, this is really where the bond market has been fairly quiet here over the past couple of weeks. trading into a bit of a triangle or an apex. You can think of this as a bit of a consolidation range after what has been a strong rally here in bonds. We're now consolidating. And then if we do see a breakout higher here, this would certainly put bonds back into the bullish phase here at the moment right now, taking a bit of a pause after a long move here. But so far holding this 146 support level here that it broke out from early in June. So we're going to keep an eye out for this, but if it starts to break out higher here, that could send Treasury yields even lower. And that's going to have further upside potential for the U.S. equity markets. Now, when we look at the dollar index, we did get rejected at this $93 level here. So dollar index back trading into this range that we've been in between 90 and 93. The question is whether it can get back down to that $90 level or so. But so far, we have managed to bounce off of that $93 level. But the uptrends at the moment still remain somewhat intact here. So I would keep an eye out for dollar index to perhaps bounce off this level and continue to perhaps grind back up to that $93 level. So we'll pay attention to here and see how the dollar reacts. But as the dollar gets rejected off that level, we have seen some strength off of gold. Gold bouncing off that 161 level back into this 167, 170 level. So far, the 200-day moving average has continued to provide resistance here for gold. Now, if we can see gold break above the 200-day moving average, that's when we start to see a test of 171. And if we break above 171, then we can really start to see gold rally up to that 179 level. So this is a pivotal level to start paying attention to here for gold, especially for those of you that are bullish investors here in gold. You know, gold, if you look at the long term, has been in this downtrend. This could potentially start threatening this downtrend and get back into this continuation pattern. And you can think of this also as a large continuation pattern here for gold, a very long one, actually, continuation pattern, and that's actually longer than the rally itself. But if it does break out, you know, this could project gold up to a fairly strong move here to the upside into the 200s or so. So gold worth paying attention to. Government bonds, 10-year yields. As you can see, this downtrend on 10-year yields so far remains intact. It did try to break out earlier this week, but so far, or late last week, so far it hasn't really stuck. So yields likely to get back into this range between 135 and maybe 115 or so. So we might see yields back towards the 115 level here later this week and perhaps be more range bound before it can break out one way or another. But that's why we're watching bonds. And so far, as I said, the bond market looking fairly strong and holding those support levels. And then when we look at crude, now this might be a bit of a short-term move here because we saw the breakdown below 66.5 last week. We had the hurricane this week that drove energy prices a bit higher here, back above 66.5. So we'll keep an eye out here for 66.5. So far, it hasn't managed to rally back above the $70 level, which was the previous high before breaking down below 66.5. So we'll see if this breaks back below that level and gets back towards the 62, which starts to correspond with the 200-day moving average. But this oil certainly still in this downtrend right now, and we're near the upper bound of that channel, and we could see some further downside here for crude. So pay attention to here, but crude so far not finding the momentum that we, some investors may have been looking for after that hurricane. The price action certainly still remains in this bearish trend for crude. And then when we look at sector rotation, we do see some rotation here this week, but largely just a continuation of what we saw as of last week. So far, we only have 3 sectors that are improving and leading, and we have 8 sectors that are lagging and weakening. So in the leading category, the only sector we have is technology. Technology has moved into the leading category. We do have real estate and communication moving towards the leading category here as well. And then overall, if you look at the other categories, In the weakening sector, you have healthcare, you have utilities, you have financials, and you have materials all moving towards weakening, and you have materials just about to be in the lagging category here. So healthcare has turned around, utilities, financials, and materials have turned around. When we look at the lagging category, you have consumer staples, you have industrials also continuing to fall behind both on momentum and relative strength. But you do have discretionary and you do have energy starting to turn back around here within the lagging category. And again, like I said, in the improving category, you have communications and real estate, both of which are just perhaps a few days shy of getting back into that leading category. So far, you don't have a lot of sectors that are moving well, and then you have 8 sectors that are starting to weaken or fall behind. So if we look at some of the sectors, those are the 3 sectors we're going to look at, the ones that are outperforming here. You have communications that recently broke out from $84. This range here, a small range between 81.5 and 84, starting to break out higher here on the communication side. And we'll take a look at some communication stocks in this particular space that are starting to break out here. You also have real estate breaking out above its range here around $47 or so. And then you have technology, after breaking out, taking a bit of a pause, and now continuing higher here. So also technology, we're seeing quite a bit of movement here from the mega cap stocks within technology that are creating this leadership at the moment from those tech stocks. So to take a look at some of those sectors, some of those stocks that we're talking about, we're looking at stocks that are either breaking out above its range or stocks that are breaking down from a bearish perspective. So the big one from yesterday is really Apple. Apple made a new all-time high after spending quite a couple of months here within this trading range here, around 150 and 140 or so. So after making a big move from 122 to 148 or so, consolidated or traded range bound for quite some time, and just yesterday started to break out higher here. So this is a continuation pattern that really projects Apple towards the $200 range, as we have now broken out of that range on fairly substantial volume. So this is one to pay attention to, especially as many investors are invested in Apple. We are starting to see this breakout from that consolidation range that we have seen the stock trade in for quite some time. Another one that has been breaking out after what has been a large consolidation range is Broadcom, or some of you might know this as Avago. This stock was a $180 stock during the pandemic, rallied all the way up to $500. So we're talking almost a 3-fold increase, and then has spent the better half of this year consolidating. And just yesterday, we started to break out higher here. This is one to pay attention to because price action wasn't particularly strong. You know, we usually don't see breakouts here that come back to trade near its breakout level, but this is one that we want to pay attention to. This very well could pull back here and perhaps get right back into the range, but you could also see this hold this 470, 490 support or so, and then continue moving higher. But we certainly have the early innings of what could be a big breakout here for Broadcom. So pay attention to that particular stock. You also have Pfizer pulling all the way back below the 200-day moving average. So Pfizer making a new relative high recently after breaking out from 41 or so. Big move up to 52 very, very quickly. Is pulled all the way back below the 21-day moving average. And that is a potential opportunity to look for a continuation higher here. I'm not a big fan of chasing these types of moves because they typically are followed by big pullbacks. Well, we just got that big pullback here below the 21-day moving average. So for those of you that look at healthcare, which has been fairly strong here, and looking for opportunities here in a fast-moving stock like Pfizer, I think waiting for that pullback below the 21-day moving average is the right time to look for a continuation, as relative strength and fundamentals here for Pfizer does look fairly strong. And then we also see Tesla. Tesla also started to form the early innings of what looks like a fully completed bottoming formation here after what has been a very big move here to the upside. You can think of this as also a bit of a triangle formation, or however you'd like to draw it, where you've had a big move, a consolidation, and now it's starting to break out here. And if you zoom in here, you have what looks like a bit of a bottoming formation that has been forming between 600 and 650 or so, and starting to break out higher here. It's had a few false starts, I would say. It broke out higher here, came back. Now it's breaking out higher here. You do have to clear the 775 level here, which is kind of your last minor resistance before it can get back into this 900 range, which is the all-time high here for Tesla. So this is one to start paying attention to as of right now, as momentum is not particularly strong just yet, but we're starting to see some of the signs of what could be some further upside as we try to push towards that 900. If we can get back above 900, that obviously puts Tesla in a far more bullish state here after consolidating for multiple months, and now potentially breaking higher back into the perhaps 1,000 or even higher range. And even Netflix, communications, we're talking about communications as it breaks out. Netflix has spent the better half of, or pretty much a full year, basically consolidating between 480 and 580 or so. And we're starting to break out towards the upper bound of this range and has the potential of continuing higher here. If you zoom in here, Netflix has been range bound and kind of trading below this 550 level for quite some time. Multiple times on earnings, it traded up to that level and then fell back on earnings. This earnings here, and now we're finally breaking out from this particular level. So this certainly puts 590 all-time high back into play. And if we can break above 590, that puts this major consolidation range in play here, because now you have this big move here to the upside. It's consolidated for a long period of time and now looking like it could break out higher here from a Netflix perspective. So Netflix, one that has not been on most investors' radar for quite some time, I think it's time to start paying attention to here for this particular stock. And then on the other side, when we look at stocks that are falling apart, Nordstrom's recently reporting earnings here. Nordstrom has been managing to kind of eke out and stay relevant, if you will, in the department store range. But as you can see on earnings, could not reach a new high and quickly fell back to the bottom of the range. And then just last week broke below that range. And now it looks like we're going to continue moving below that range here. And as you can see, Nordstrom, after breaking out below this $32 level here and breaking below the 200 week moving average, there's a big downside here down into the $12 range. So Nordstrom, after completing a very big topping formation, is now starting to break lower here. So this is potentially a lot more downside here for a stock like Nordstrom. And then when we look at IBM, now this one has not broken down yet, but it has all the hallmarks of what looks like a topping formation and is now starting to test this support level multiple times. And each time it bounces off this support level, it fails to get back to a new high, and it keeps making new lower highs. And that's exactly what we're seeing. So as we start to test this 137 level or so, as we start to break down and potentially test the 200-day moving average, that's where we can potentially see some downside here for IBM. You have 132, which is a major support level here, which happens to correspond with the long-term moving average. If we break below 132, this is heading back into the 115, 116 range here. So IBM, one to pay attention to, because this is a stock especially if you look at a long-term chart perspective, has had zero relative performance for many, many years. This is a stock that has underperformed the market for many, many years. It did have this strong move here lately, but as you can see, relative momentum here has started to fall apart here again, and I'm concerned that IBM is, just getting back to its longer-term underperformance here from the equity markets perspective. One that I do want to point out here is, there was a lot of interest last week in some of the airlines and a lot of travel stocks. We had big moves in some of the travel stocks like Booking, Airbnb, the airlines. The one thing I want to point us to is the weakness this particular week And I think what this shows us is that this is not quite the time to get back into these travel stocks. Airline stocks failing to break out higher here. We see this across the board for pretty much major airlines. Most of the hotel stocks that have saw some strength here last week showing weakness here again. I think you're going to be trading back into a range before it can really break out here. I don't think this is time yet for these stocks to break out, and the price action here from this week I think confirms that. And lastly, I'll leave you with MasterCard. MasterCard, also similar topping formation here, failing to break out higher here, had a double top here around 395, 400 or so, and is now breaking below the 200-day moving average and breaking below some major support levels here around 360, 350 or so. So pay attention to this as it starts to break lower here. This has downside down to the 330 level here or so. We're seeing this in quite a bit of the weakness from the card players here, whether you look at American Express, Visa, MasterCard, Capital One. You're seeing similar types of weakness here as they all starting to test some support levels or started to break below support levels. This is one where I see some further weakness here from some of these card providers. So with that covers what I wanted to share with you here today. I hope that this was helpful in giving you a better understanding of the broader equity markets and what is currently moving within those markets for some ideas. So with that, thank you so much. I hope you guys have a great trading day.